Multifamily Mindset
Podcast. Think bigger.
Welcome back to another episode of the Multifamily Mindset Podcast. I'm your host, Zach Rucker, co-founder of Black Cedar Investments and coach here at the Multifamily Mindset. If you're new and just listening to us today, welcome aboard. We're excited to have you here in our growing community. And to give you a quick rundown, on Tuesdays, we do these interviews with students from the Multifamily Mindset Mentorship Program. And then on Thursdays, Dallas unpacks the mindset principles from these interviews. And then that's not all. On Wednesdays, Tyler Deveraux, the founder and CEO of the Multifamily Mindset, has his podcast called Own the Outcome. So with that, let's go ahead and dive into today's episode. I'm really excited to jump in. We have a couple awesome guests with us, and they're going to drop a lot of information for you guys. So with that, today we have Tim and Herb from Cap Asset Risk Management and Imrook Capital. Guys, thank you so much for taking the time out of your day to jump on and share your story and what you guys are up to. You guys got a lot going on, and I'm excited to dive in.
Yeah, thanks, Zach.
Yeah, Zach, we appreciate you having us on here. Yeah, looking forward to talking to you and some of the other students and really trying to grow this community.
Yeah, awesome. So with that, let's give our listeners a little bit of background on you guys, and just kind of what brought you here, and then we'll kind of dive in from there.
Certainly. Well, yeah, I'm Tim O'Rourke. I'm one of the co-founders of Cap Asset Risk Management, which is our insurance firm, and then co-founder of Imrook Capital as well. So that's our capital raising firm. A little bit about Cap Asset Risk Management. We specialize in habitational insurance. So we predominantly focus on apartments and condominium association insurance. So we're definitely the specialists and the experts when it comes to habitational insurance. Obviously, that's the bane of a lot of people's existence right now is insurance. So We're here to try to add some value, talk to people about it, demystify it a little bit, try to just talk about the ups, the downs, the good, the bad, and maybe some ways to help students navigate the insurance world as you're out underwriting products or properties, as you're going to look at properties, and always kind of have insurance in the back of your mind, and hopefully have Herb and I in the back of your mind as well as a good resource for students to evaluate some properties. And then my business partner, Herb Dorow, let him talk for a little bit about him as well.
Yeah, same thing. Co-founder of Cap Asset Risk Management and co-founder of Imrook Capital. I've spent most of my life in the insurance field and built programs specific to habitational condominiums and apartments. So my clients were always in that field as owners, operators, or third-party managers. And then when Tim and I decided we were going to go on our own, it was kind of, how do we do things differently? As we've invested in deals and we've been a part of deals, we've seen how insurance affects an NOI, it affects an exit, sometimes prevents you from refinancing because your insurance has gone up a lot. We thought, if we're going to be involved in a group, then we can provide a lot of value, just not from our experience on the insurance end, but firsthand on how it's affected our own deals.
Yeah, I mean, that's awesome. Yeah, insurance is a pain point and a sore subject for a lot of people. So it's good to have you guys in the network to shed some light on that for sure. Because I've been dealing with some pain points with insurance on some properties that have definitely impacted a lot of factors there. So with that, we're going to dive into some of that too. I'm sure I have some questions for you guys, but yeah. Before we dive into the insurance piece, want to touch on when you guys joined this, the impact of the 3-day event, workshop event that you guys went to before kind of joining the network. What was the impact or experience that you had going to that event?
Yeah, so I mean, we've said it before openly, so it's not a surprise. We went to the 3-day. So we've invested as LPs because that made sense. I mean, we make good money writing insurance, and then our clients made 10 times more money than us, right? So we thought, well, we got to invest with them. That's the first step. And then we went to the 3-day. It was simply to be in a room with people who were potentially buying apartments, and we would insure them. That was just a very smart decision for us as insurance agents and business owners. And we got there, and I personally left there going, why do we just LP? Why don't we start owning? And so that takeaway from me was, if there's a way for us to add value and be on the ownership side, then we need to be on that side, because there's a reason client ABC is buying a new airplane to offset his taxes, and Tim and I are still paying taxes. Like, I mean, we have clients who are billionaires buying property, and we're not billionaires. So we thought we got to figure out a way to be on their side as well, and let's leverage both ends of this.
Yeah. Wow.
Yeah, we went there the first day, and it's like drinking water from a fire hose. I mean, you're getting pounded with so much information and NOI and terminology that we had never really heard with or dealt with before. So we kind of took it all in that first day. I remember going to lunch the second day going, are we going to do this, buddy? We came here to find clients, and all of a sudden we fell in love with the people, the process. We had Jim Anderson give the 3-day, and he is, if anyone has been to his 3 days, a phenomenal speaker, absolutely motivational, and an awesome story. So we had gone out to lunch, and we know Samuel Pisani, who's been in the group for a while. We had met him at another event, and I remember texting him saying, hey, we're at this 3-day. What are your thoughts? And he goes, it's awesome, but you got to put the work in. They're not going to do it all for you. You've got to really devote yourself and commit to learning everything, growing your partnerships, finding new teams out there. And we went back the next day and met with Jed and said, we're going to do this. We kind of changed our business plan. We had just started our insurance agency and kind of pivoted pretty quickly there and said, okay, let's do this. This is going to be a portion of our business as well. So I ended up signing up for it, I believe, the second day. So the third day, and then you go to the fast track, and now we've been in the group for almost a year now. We had a great time at Peak 2024 last year, or this year out in Orlando. Met a ton of people there. So it's really shifted our business, and it's helped our insurance business, obviously finding some new clients, but just even going to like some goal setting with Tyler, and it helped us focus in on, hey, what we're going to do in the multifamily space, but it also translated to our insurance world as well. So we've gained a lot of value, business value from the group as well, not only on the multifamily side.
Well, I think you said it right though, Tim, like are we really going to do this? And then being 100% committed. And like Samuel reiterated that we've always been very focused on the insurance side, but we started one company, which was capital heavy to start an insurance agency and do it correctly. And then signed up for the mentorship program, which is also capital heavy. And I remember Tim and I were making phone calls to potential prospects and getting on planes to fly across the country to close deals, so we would have the 40 grand to pay for the mentorship. Like, because we have employees and we have rent and we have office and we have all these other things that came with the first company we started. And like 60 days later, we decided to start a second company. So, I mean,
Wow.
but it's full commitment, because if you're not fully committed and you're not going to do those things, then you should have just saved the 40 grand, right? And that's not why we were here. We were here to do something with it.
Yeah. I love that. I mean, yeah, you guys said it perfectly. And what's so interesting is you went to the event in the purpose of building your company you just started, right? Insurance, and start building that, find some more clientele, and then shortly just getting that itch, that little, multifamily itch to just, oh, we got to just jump in, right? It's contagious when you go to those events and you feel that energy, but you're learning this information that's like, oh shoot, yeah, we could do this. I love bringing that back around where, Samuel Passanisi, just said, yeah, it's hard work. You got to jump in, and you guys did that, right? One, you did that with your business, your insurance business, and then to do it on top and do two businesses at once that's a huge step to do that, and it shows that you guys bought all in, right? And hey guys, if you're enjoying this podcast, we'd really appreciate it if you could take a moment, leave us a review and a rating. Your feedback helps us improve and reach more listeners. Plus, we love hearing from you. Thanks so much for your support. So with that, like, I kind of want to jump into kind of your insurance business, and kind of ask some questions along those lines of what's going on in insurance right now, right? Provide the listeners a little bit of information on what's going on in insurance world, and how can people kind of find the right, I guess, person to work with insurance, or what information's maybe false out there that they're getting as well.
Yeah. Do you have questions you want us to just hit right now, and then we'll fill in gaps?
Yeah, I mean, I guess first, like, how can investors best manage risk when they're looking at properties? Like, what's something they need to be looking at? Let's talk about that first. When someone's looking at a deal, what are the key highlights that you guys as insurance are looking at, that's going to cause your insurance rates to be higher or lower, your premiums, right? What's something that new investors need to be looking at?
Yeah, so there's inherent risk, right? Coastline, wildfire areas, flood areas, but those built-in, baked-in risks have already had that insurance, right? Typically, if you're looking at a property that's in a flood zone, they have flood insurance. And so you're looking at a T12 that hopefully represents flood insurance as well. And we have some ways to ask questions and find out what type of insurance they have. But when you're looking at a property outside of those obvious things, roofing's a really big deal. Electrical panels in older units are a really big deal. So typically mid 70s, you get away from those issues, but they're still notable. But there's a list of 6 electrical panels that, depending on the carrier, they're on their excluded list, and they just won't write that property. And so the problem is you leave what we call the standard market and you move into a surplus lines market. And when you get into that market, it's like the Wild West. They can make up whatever rate they want. It's unpredictable. Plumbing, galvanized plumbing is an issue. The other thing they have is it's like a polymer black pipe. It was used for drain lines a lot. Problem is once it's like 60 years old, it dries out and gets really brittle, and you have no idea when it's going to break. And so insurance companies don't love that. And they quit using that around 82, but that's still something to look for. And so you have those 3 major concerns that aren't necessarily evident, right? It's not next to the ocean. It's not in a wildfire area. So you think everything's good. And the problem is we've found insurance carriers are really stupid. I mean, they're like the largest, oldest companies in the world, but they're the dumbest companies ever. They react so drastically the wrong way overnight. And it takes them years to make smart, educated decisions back the right way. And they wait and undervalue and underinsure things and write bad risks for 20 years at a really stupid rate, cheap. And then all of a sudden they're like, well, we've lost billions of dollars. And instead of trying to find the best risks in their book and keep them, they just blanket raise their rate 50, 60%. And any risk that's worth a damn can find better coverage. So they leave and they're just stuck with the bad risks. Like they just have, for 100 years, they've made bad choices.
Wow.
What happens with that though is if I bought a property 3 years ago, they didn't ask me what type of electrical panel I had. And so it wasn't on the app. So it was never answered. So they insure me. And we'll make up a number. They insure me for $50,000. Well, I sell that property to you, Zach, and now that question's on the app. And so you have Zinsco panels. I have them. You just bought this place. And now all of a sudden, State Auto won't insure you, or State Farm won't insure you. And that's aside from all the other issues that have been created over undervaluing and through COVID and inflation. Just that alone means the carrier you thought you were going to get won't take you anymore because the question's on the app and they are going to inspect it. And they never inspected the guy before because they always inspect current clients last. They inspect new business first. And so if you're not aware of those things, you potentially get into a situation where you're hopefully not locked in, but you're ready to close on a deal or ready to move forward with a purchase agreement. And then you find out the insurance is $150,000. And that screws up a bunch of numbers. Oftentimes, in almost every deal we've seen, $100,000 swing will ruin a deal. And so being aware of those and being coached through that process, having a checklist to walk through with the broker, and maybe pre-LOI or just after an LOI. So the first site inspection, those are the things you're looking for. And you have a way to walk away from the deal or to navigate that deal and say, listen, we can't meet our insurance requirements for a price that makes sense at 20 million anymore. But if you help us at 19.7 million, our lender says this deal still works and we can move forward. and you're bringing educated knowledge to a seller and a broker instead of just trying to browbeat them the day before. And
Yeah.
we found at least that sellers and brokers, if they have an educated response and they understand the reasoning behind your pricing or why a deal needs to work a certain way, not every time, but they're often more likely to listen and pay attention and try help to move that deal forward.
Yeah. So real quick, I want to touch on, you mentioned, previously they weren't asking the question of the electrical panels, right? But now they do ask that question. So was there some event that happened that caused that, or is it just what's happened over the last 3 years? I know inflation and COVID and all that, insurance rates, obviously natural disasters caused a lot of it as well. I guess what made that change for people that, thought they were fully insured, but really the insurance company wasn't actually fully insuring them because they didn't ask the right questions at the time?
Yeah, I mean, they had coverage, and had there been a fire, they would have been completely covered. It just wasn't part of underwriting. A couple of fires happened, and they were caused by the electrical panel. And then a safety committee decided they were going to do a review. A national fire committee wrote a report about it. And once one carrier was willing to cross the line and say, hey, we're not going to take this risk, and you didn't have to be the first carrier to maybe put that exclusion in your policy, every other carrier quickly followed suit. And it was a way to get off risks that they thought could be a potential issue. Now, we insure about 50,000 units. And so billions and billions of dollars of property. A lot of that property is from the 60s and 70s, and we've seen a lot of our clients from that 60s and 70s did have stab lock, did have Zinsco. I've personally never had a fire from one of those boxes in my 17 years writing insurance.
Wow.
So I don't know, do they really cause fires all the time, or was it this just snowball effect of a couple of bad things happened, they had 2 fires, Travelers said we're not going to write them anymore, and then Philadelphia and Greater New York and everyone else said, oh great, we don't have to either, let's get off these. And it may have just been a way to clean up risks from 1960 and 1970. But either way, that happened. And so now we're left with this void. Who's going to take those types of risks? And right now it's the surplus lines market.
Yeah, where they can charge what they want.
They can charge, they can charge whatever they want. And adding to that, not only can they charge whatever they want, but they're getting it because no one else will take it. So when they say it's going to be $300,000, like 4 years ago, you would have laughed. You would have never even opened that quote. Now you're going, thank God somebody even offered a quote.
Yeah.
I think another important point, Zach, especially for the newer students, is finding a broker. You really want to find a broker that you like and trust to work with. A lot of our students are coming from fix and flip or single family. So when you're going to get insurance for your home or your auto, you call Geico, you call Progressive, you call State Farm, you call these people to try to get the best price you can. It's a completely different world when it comes to commercial, and especially in the apartment world. You really want to find one broker, potentially 2, but one good broker who has access to multiple different markets. And then we will go out and pit the carriers against each other to try to take your risk. So we're telling the story that, hey, Zach bought a great new property. The roofs are 20 years old, but in his business plan, in the next 30 to 60 days of replacing the roofs, they're fixing the holes in the driveway and in the sidewalks. So we're able to tell that story to say, hey, there is a plan to get it fixed. It's going to reduce the risk, hopefully reduce some premiums. But you really want one broker to go out and pit all these carriers against each other. If you have 2, 3, 4, 5 brokers, they're all going to the same markets. They'll all be blocked, and some have favorites, some have this. So if you find a good one, especially, you don't want a generalist either. You really want somebody who specializes in habitational apartment insurance. Herb and I don't insure trucking companies. We don't insure flower shops. All day, every day, we're talking about multifamily and how we can insure these products and getting these underwriters to trust us. And they say, because all of a sudden, if you take 15 properties to the same carrier and never give them an option, they're all of a sudden not going to give you the best prices. So if you have somebody who's doing it all day, every day, they are really out there working for trying to get you not only the the best coverage, the best premiums. And we always say, hey, insurance is going to be expensive. You really want to make sure you have the right coverages if you're paying that much.
Yeah, that's a really good point. So it's not wise to go work with multiple brokers, but it's good, I guess, from that point. Yeah, reach out to multiple brokers from the sense of find the one that you like the most and you can trust, right, and build that relationship with.
Yeah, for sure.
Yeah.
And that doesn't mean if you're with somebody for 3-4 years that you can't engage with one other broker and let him make sure you're getting the best and provide you advice. But having 10 brokers all shop the same property is actually, it doesn't create an advantageous spot for you, right? Because eventually we're going to be blocked from carriers. And once we're blocked from carriers, underwriters don't really get confused. There's a misconception that underwriters are going to wonder who's really working the account, but like it's blocked. You just can't submit it. The biggest problem is oftentimes, and you'll know this, it'll relate to your relationship with a broker selling a property. You work with a broker who's selling a property and you've bought 3 or 4 properties from him. He calls you first when he finds an off-market deal, right? So sometimes there are really great carriers out there who can do things, but if I went to them directly, I may not have enough business to make that needle move. So I'll give up a percentage of our commission and I'll work with a broker to access them because that guy puts $100 million in premium with them every year. Well, the guy down the road who's also trying to quote them blocked me, but he doesn't have that needle mover like I have. And now I can't access them. Even with my good friend who does $100 million in premium a year with them, I just can't access them. And they might have been the right carrier, but the guy down the road is going to get a really high quote or we're not interested in this deal, and you'll never see anything from them, and you'll never know because I could never talk to him either.
Wow, that's interesting. Yeah, that's really good to know. It's
leverage relationships, right?
I mean, that's key. That's the biggest part of joining the network, right? Is leveraging those relationships, building the right relationships gets you places, for sure. So, I mean, we highlighted some of the risks, investors should be looking at with their properties, answered why now, stab lock, panels are on the list that you can't have just for some apparent reason.
Pull a reason out of a hat. That's the reason it is.
I mean, that's crazy. Explains a lot about insurance, and to your point of what you made. So very interesting with that. Is there any new, like, I guess, trends or other things that newer investors should be looking at with insurance to pay attention to, or is that kind of just pay attention to those red flags and focus on one broker?
Yeah, the red flags, right? So the red flags are not necessarily deal killers, but they will change insurance and they will change how that deal may work. And you need to be aware of them. We think personally that the stuff that happened 2 years ago, the 100% increases, the 200% increases, not because of the electrical panel, but because building values, you used to insure for $100 a square foot, and we know you can't rebuild for that. And the carriers finally put an end to it. And now I think our lowest carrier is $145 a square foot. But if you want good coverage and you want blanket and you want the guaranteed replacement cost, you're into the 180s. And so just on that alone, you've almost doubled the cost of insurance because you've doubled the amount you have to insure for. Also, properties are starting to trade. They've come down a little bit, but from where they were 3-4 years ago, properties are trading higher. And so if you're buying a property that someone bought for 10 million and they insured it for 10 million per their loan, it doesn't matter if the rebuild cost is 6. If you buy it for 15, no lender's going to let you insure it for 6 million. They're going to want their risk covered. So you're automatically 50% higher than the guy who just had it the day it trades. And that's if everything's perfect. And so when that stuff happened, we had the insurance rates go up. We also had the inflation and building coverage go up. We think that's settled a little bit. I don't think rates are coming down, but I think it's pretty safe to assume if you looked at somebody's T12 and they had an insurance renewal somewhere in that T12, That's important too, because everyone looks at the total, and the total might be 50 grand. But if you start back last year in January and they're paying 4,000, 4,000, 4,000, and then in June you see it's 8,000. Well, don't take the 50,000, take the 8,000 they're paying now, because that's their most recent renewal. That's the most accurate number. And so now they're paying 96,000. It's pretty easy to determine, because they've gone through a cycle, they've gone through renewal. That 96 is a more accurate number. It shouldn't do anything crazy as long as those red flags aren't out there. And if you're buying it for 10 and he paid 8, well, just add 20% to that. If you're buying it for 20 and he paid 10, then you probably should double it, because you're going to have to insure it for twice as much. But I don't think we're going to see those overnight 100% increases at someone's typical renewal, unless there's those red flag items that are uncovered at renewal.
Okay. And are you seeing that a lot with, when doing renewals? Are they starting to check those items now with renewals, or are they still kind of maybe keeping
now
those?
They're on renewal apps.
Okay.
I would say 50% of the carriers got them on renewal apps starting in January. So I'm going to guess most of them will have them by next January. Most carriers have their reinsurance, and that gets negotiated sometime between January and April of every year. And so it's as that reinsurance gets negotiated that they make changes to their apps or underwriting guidelines. Do they still want 1970s buildings, or is their cutoff kind of 1980s going forward? That all has a lot to do with how their reinsurance contract negotiations go. So I would think by next year, most carriers will have that question as a renewal. And then if we don't answer that correctly, I think within 2 years, almost every property in the habitational world is going to have a physical inspection in the United States.
Wow.
So typically it's only on new trades, but we've seen a lot of carriers start ordering inspections at renewal.
Wow. And renewals, even in the commercial space, that's yearly that you're conducting renewals. I just lost you guys. Can't hear you now.
You can't hear us?
I can hear you now.
Okay.
Good?
Yep. Good.
All right. Yeah, there used to be a carrier who did a 3-year term, and everybody loved them. The rate essentially would not increase unless you had a negative claim experience. So it really wasn't a rate lock. It just said, hey, if the company takes an arbitrary 4% rate increase, it won't affect your policy. But if you have a claim, we have the right to raise your rate. So we felt that was pointless anyways, but we haven't seen one of those in almost 5 years.
Okay. No, good to know. Good to know. Okay. So I guess on that, you guys building out your clientele, so forth, and mentioning this, I'm assuming has helped you also, get and start building up your multifamily business, right? Of trying to acquire a deal. How did that play a role in getting your guys' first deal in multifamily?
Yeah, so actually we got involved with one of the property management companies that we insure here in Michigan. We'd insured them for years. They've been good friends. They own a property management company. They own about 900 units on their own, and then third-party manage about 3,500 extra. Not that they own. So we had just started some conversations with them. Hey, we're in MFM. We're doing this. Started talking to them more and more, trying to find out ways if we could get in on a deal with them or potentially partner with them. MFM had a real mindset change for me and her, I believe, as well. In the insurance world, it's basically a zero-sum game. We either get the business or we don't get the business. So we're out fighting with people all the time to try to get the business. We came into the MFM world and kind of realized, hey, that's not the case in this world. It's an abundance. There is so many units out there, and you cannot do it on your own. I mean, it takes an entire team to go down and tackle some of these properties. And it's really forced Herb and I to look ourselves in the mirror and say, hey, we're good at this, but we are not good at this. We're not good at this. We're not operators. We don't have that mindset. We've never done it. We're capital raisers. We can go out and find people. We're great connectors. So that's really where we found our strength in this. And that was when we started talking to Essential Property Management. hey, how can we get involved in this deal? And this one actually came on the market, and they kind of asked, not kind of, they asked us to raise some capital for it. So that's how we got involved in this deal. And this is Herb and I's first time raising capital, but we've been around high net worth individuals for 15, 20 years in our career, never asked anyone for anything, just continued to build our sphere of influence and connect people and really try to grow that community that we have ourselves. So that's really how we got involved in this one. And we had the conversation, Herb especially said, hey, why do you want us in on this deal? I don't know if you want to elaborate a little more on that, Herb.
Yeah, I mean, the conversation came up, we kind of downplayed it, right? We know we have value. And so we'll back up. I had always felt that capital isn't the only reason you should invite someone into the deal. And it was reiterated a few times when I watched other people ask, hey, I want to be a part of your deal. And the only thing they brought to the table was they thought they could raise capital. And outside of, if you have a couple of decent connections, capital is really cheap. I mean, a broker dealer charges like 2%. So it's not that expensive to go find $1 million for a deal. If you have a little bit of cash, you just make a relationship with a broker dealer. If your deal works good, they'll find you the cash. So why would you share 15% of your deal with someone to bring you $1 million? That's a lot to give up. You have to bring more value. And so we talked about the things we do over the years, and then we asked them, so why would you want Tim and I in your deal? Because you want us to help find, the raise was more, but they asked if we could maybe bring in $1 million. And we thought, yeah, we could probably find $1 million. And so the question was, why would you give up 15% of your deal for $1 million? And they go, it's not that. It's because if I call you on Friday and have an issue, you're going to be on an airplane to help me deal with it. Because you're going to take the phone call on Saturday. Because your long-term is connecting us to another equity partner who can potentially present 2 or 3 deals to. And now we have 3 or 4 family offices who are fighting with term sheets over who's going to bring the $5 million. And so we add a lot more value than just $1 million. But I wanted them to say it. I wanted them to understand that I think we have more value. Tim knows we have more value. I wanted our partners to realize we have more value than just $1 million. And so I think that's where that conversation turned, where it wasn't just, do you want to be a part of a deal? It's, do you want to partner and go buy 3,000-4,000 units together? Yeah. Because they realize we have value. We know we have value. And now we have a way to leverage some of those relationships. And as Tim said, like 15 years of insuring property for a lot of people who make a lot of money buying property. They don't always buy property on their own. Oftentimes they just write big checks to be a part of other deals because they don't have time, or they specialize in offices. They don't specialize in apartments. One of my biggest office clients owns like 10,000 apartment units. He just LPs in them because that's not his niche. So we have access to these guys. We've never asked for a favor. We've never brought this potential to them. So that changed that a lot in that negotiation and that conversation, that this doesn't have to be a one-time deal. But I think I took from it that the easiest way for us anyway was not to try to be everything. Like Tim said, we're not everything. Yeah, if we have a problem, I'll go down there, but I'm not the guy who's going to meet scheduled contractors at 6 a.m. Like I have this other thing I'm trying to focus on, and I don't want to screw that up by trying to be everything. Yeah.
But I mean, you highlighted it, and I think that's very valuable that they were to come to the table and say, well, no, we see not just this deal, but future deals, right? You built that rapport with them, which was, I'm sure, over time, over years, right, of building that relationship, that connection that opened that door to not only just be a part of a deal, but open the door to many more deals. And I think that's very valuable for our listeners to know, is this relationship didn't just happen. This relationship, you spent time nurturing and growing and building that trust. And this is a relationship business at the end of the day. It's about building those relationships. And that's what I want our listeners to know, is start building those relationships and that rapport with people. And I mean, it might not pay off right now, but a year down the road, 2 years down the road, 3 years down the road, even further down the road, it could pay off, and it could pay off really big similar
Yeah.
to buying an apartment complex. Sometimes buying it, you got to hold it for 5 years to really get the payout, and to really benefit from it. Sometimes you got to wait for that. I have the similar situation where, I've been building relationships with a key, principal or sponsor for 3 years, and we didn't work on a deal, for a long time. But we built that relationship, and we liked who this person was and fit our core needs. So we continue to build that relationship to now we're doing multiple deals with this
Yeah.
person, because we built that trust, that we're getting invited to these opportunities just like you guys. And so I think that's super valuable, and tells a lot, of what needs to happen kind of behind the scenes.
Yeah. Yeah. It's like one day, whatever it is clicks, but no one realizes the 7 years of relationships behind that.
Yeah.
Right.
Yeah.
And self-admittedly, we felt we could raise the money, but the raise was a little over 7 million. There was a $5 million equity partner with some hurdles, but the deal works really well, meets half of the hurdles with very conservative underwriting. So that works well. We have to raise about 2 million, and we were overfunded in 7 days.
Wow.
But that wasn't 7 days. That was 17 years of my relationships and Tim's relationships, and having things you've done with other people or co-marketed with other people and shown them that, hey, you're trying to get this type of business, I'm trying to get this. And if we work together, and it worked well and we did it. So it wasn't a 7-day process. I think people don't really understand that.
Yeah. No, exactly. I mean, you guys have been in the program for about a year now, right? And it wasn't just this year too, right? Like you mentioned, it was more than just this year. You built a foundation over the years. You used your previous experience and relationships that you built with, which you can also play into anyone jumping into this space. Like, even if you have no real estate knowledge, that doesn't mean you don't have connections that you've built over the years that you can utilize. And that's where you got to start, is these relationships that you're building or have built throughout your lifetime, right? In previous careers or whatnot. Bring those back around, and it might be the right opportunity, at the right time, right? And adding value to those people as well.
Yeah. Building relationships, but connecting other people has always been huge, right? We've never asked for favors. We've asked if you know somebody you could introduce us to, sure, who hasn't, but we make probably 10 to 1 introductions before we ask for one. It's like Tim walks in the room and he says he does insurance, and Zach walks in the room and he owns buildings, and I introduce you and go, you guys just met someone really cool. I hope it's prosperous. And you just walk away.
Yeah.
And if their relationship blossoms, they both keep thinking of Herb, or any way in that triangle you make that happen, right? They keep thinking of that person who made that introduction. And if you do that, whether it's 10 years or you just come into the program and you don't go to peak thinking, what can I get? But you go to peak thinking, who can I meet? How can I help them? You can help everybody. It doesn't matter what your field is. I would say 99% of people at peak have value they could add to somebody else. And if you start to add that value first, the repayment has always been 100-fold to me.
Wow. I mean, it's powerful right there. Yeah. What can you do? What value can you add to others? And then it'll circle back around. I love that. I love that piece. So I want to kind of switch gears a little bit, to talking about your guys's why. I think it's really cool. It will kind of push you in this direction a little bit too. You guys have kids. I want to hear about your guys's why, that you, what kind of pushed you here? What experience did you guys have, with your kids that maybe pushed you in this direction to start not one, but 2 companies and be on this path that you guys are on?
Yeah. So between Herb and I, we have 7 kids. I don't necessarily differentiate how many each of us have.
You can say it.
Herb's got 5. I've got 2. So he's quite busy.
Tim doesn't know any of the struggles.
But all of our kids are involved in sports, and we worked for other companies, Herb and I, for a long time. And we were preaching to our kids, hey, don't let somebody control your time. Don't let somebody control your money. We're having these conversations with them at night. then have to set our alarm to go be on somebody else's time to make sure we're in the office in the time we're supposed to. And we just kind of, I think I started a little earlier. I said, hey, buddy, I think I'm going to go look at the franchise route. Going to start doing something on my own. A little bit later, he came and said, hey, I think it's time to start something on our own. So over a few beers, like some of our best decisions, we decided to go on our own and start our own company and really start practicing what we have been preaching to our kids. And I'll be honest, obviously, this is a long-term goal. We're probably spending less time with our kids right now because of the business we've started, the couple of business that we've started. But our long-term goals are still very aligned, that we want to be able to make our own decisions. We're somewhat fortunate in our jobs that at some point, we're going to be able to work from wherever we want, whether that's sitting in our beautiful office that we have here, or if we're on vacation in Greece. We want to have the freedom, not only time, but money as well, to be able to do the things that we really want to do and help our kids in the future. I went to community college. I believe Herb did as well. If our kids want to go to college, we want to be able to fund that, obviously. But the hope is maybe they don't. Maybe they want to go out and figure out their own way in this world. Take a year off, go backpack, go do whatever you want, go find yourself, have some opportunities that potentially we didn't have, and then go out and start your business. Or
Did you get your degree?
I did. It took me 6 years to get my associates, but I did end up getting mine. But yeah, so we just want to give our kids opportunities and us. And I joked, I was at the 3-day capital raising masterclass with Tyler, and it was awesome. We learned a whole bunch. We went through a lot of our whys and what we're doing, and we had to define our avatars. And I kind of defined myself last year as my avatar, a person who had a great income, but was tied down to W-2, didn't know about multifamily investing, found Tyler on Facebook, went to the 3-day, now we're doing this. So wanting to expand that and spread that out to our kids and give them potential to kind of do a lot of different things. And I joke, I want to be a rich grandpa. That's the goal. So make a whole bunch of money right now. When our kids start having kids, be able to take them on adventures and be the grandpa that's got the money and the Corvette and the cool grandpa.
Nice. I love that. That's awesome. So with that, what are some maybe opportunities that you're trying to create for your kids? Obviously, right, you guys are out there grinding and showing them that they can go out there and do the same. Is there any like specific pieces, bring them in the fold of your business, or kind of other opportunities or lessons that you're trying to instill in them, that you're at this point?
Yeah, whether they're a part of the business or not, I think more it's the lesson of it, right? It's, if you want something, there's a sacrifice at some point. And that sacrifice, although I've never been a W-2, that sacrifice is either working for someone else for 40 hours and you want a family vacation, so you work some Saturday overtimes to pay for it. And you miss your kids' baseball game on Saturday 6 times so you can take them to Disney World. Or the sacrifice is you build a business, or you build 2 and you essentially start over from something pretty cushy at near 40, right? Whatever that is, I think I want my kids to understand that 1, you're capable of it. 2, it doesn't have to happen when you're 18. You don't have to have it figured out. And as long as you are the one in control of it and no one can take it away from you, then it's okay. If you, I'll use the language, but I have an F load of money and I have FU money, right? And someone controls an F load of money. A really big paycheck's awesome until they take it away, or your commission gets cut in half, or they tell you have to work on Christmas, whatever it may be. And my preach to the kids is like, whether it's 3,000 units or 30, like 30 duplexes, make sure no one can ever tell you have to work on Christmas again. It covers all your bills. Yeah. What's that sacrifice to get there? Does that mean you don't go out and buy a brand new car at 18 and spend your whole paycheck on it? Does that mean you don't go buy a really big house the second you're 25 and have your first good paying job? Whatever that is, there's a sacrifice in life. And I just want them to kind of see that path. I want them to make that choice on their own, but I want them to see that path, that there are options, and it doesn't have to be someone else telling you how that has to work for your life.
Yeah. I love that. That is awesome. Yeah, it takes sacrifices to do that. And so which ones are you willing to take? And also kind of leaps of faith as well in that kind of journey with that. This has been really good. I want to wrap up with our three or think bigger questions. So first question there is, how do you choose to think bigger?
So I'll say joining Multifamily Mindset really did expand Urbanize mind. Like you said, we went to our 3-day to try to find some clients and walked out of there starting a second business within about 90 days of starting our first business. And it really opened our eyes to the possibilities out there. Everyone thinks they can do a flip and flip or buy a couple single family units. It really expanded our mind when we said, okay, you don't need $5 million to go buy some multifamily units. And you start a little small, and all of a sudden that can expand and expound, and all of a sudden you've got 1,000 units, and that has completely changed your life and potentially your family's life. So it's really enabled us to think bigger. I mean, obviously that's the motto of MFM, but it really did open our eyes, not only in our apartment side, but our insurance side as well. The sky is the limit, and it's just some belief. You got to believe in yourself. You've got to have some mindset changes, and we did. Originally, some of the mindset stuff was, we weren't really into it. I'll be honest, it was a little foo-foo. And then all of a sudden you're jumping on some of these different podcasts. You're jumping on, whether it's Dallas giving some of his presentations, or Tyler, who is extremely engaging and so positive and always thinks bigger. All of a sudden you start going, okay, we can do this. I can do this. And it goes from we can to I am doing it, and we are doing it. We have done it. Now all of a sudden we're in our first deal, and it's very hard. We had what they call paralysis by analysis for a long time. We were super scared to do anything. We'd look at stuff and not do it. And all of a sudden we jumped in with both feet and said, okay, we did it. We can do it. And we're going to do it again, and hopefully many, many more times.
Yeah, I love that. Everyone kind of jumps in a little bit and they're like, I don't know about this mindset stuff. This is a little, let's get to the meat and potatoes. And then it kind of circle around at the end of the day of, wow, the mindset was key in all of this, and allowed us to get where we're at, because it really opened your minds, right? It made you think bigger. So I love you brought that up, because I think a lot of people go through that, and I hear that from a lot of students. Week one in the mentorship is focused on mindset goals, and we talk all about that, and people are just, I get the complaints left and right. I don't need this. Tell me how to do a deal. And it always comes back around. Everyone that's been on this podcast has said the mindset's been a huge shift and has allowed you guys to expand. And I think that's really neat. Herb, you want to talk anything about think bigger as well?
Yeah, it's the same thing. Like, the mindset allowed me, I guess, as Tim said, to like take that first step, right? To think bigger. I've kind of always thought bigger. If you don't think bigger, just like fly private one time and you'll start thinking bigger, because you're always going to want it. And I couldn't afford to do it more than once, right? So like now you want it. So you think bigger, but buying an apartment or whatever it may, starting a business, that stuff's scary. And you can make $500,000 a year your whole life, but have never bought an apartment. And you're like, just tell me how, I'll go do it. And then you get to that point where you're like, well, this is the deal, and you don't do anything with it. It's scary. And so having the mindset, having someone to call like Samuel and go, hey, like we're going in on this deal on the GP side. And he's like, that's awesome. You got this. This is, just do this and this. You'll be fine. Call if you need something. Like, that is huge. And I don't know anywhere else where I've had that ability to just make phone calls to multiple people and not have to feel per se judged by it, but openly just give a call, and someone's there to walk you through it, or say, yeah, I've done that. I was there. I remember the first deal I bought. That was terrifying. Here's the deal. Just buy the deal. It gets better, right? And so besides all the training, besides some of the mindset and like getting goals right, just having a network of people who, as far as I've found, are similar goals aligned and want other people truly happy when other people succeed, even if it doesn't help them in any way. They're just happy someone succeeded. I've never had that before.
Yeah, it's powerful. It is powerful. Okay, second question is, how do you define success?
I think we define it in multiple ways. I mean, obviously, the easiest way to define it is economically. We've got our goals what we want to do, how much we want to make, what we want to be able to do. But at the end of the day, a lot more of it is growing our business and having the small wins and then the big wins. Obviously, the small wins are great, and you can celebrate them to make sure you're staying positive. But our success is some of our big wins. Obviously, being in our first deal is a huge win for us. But some of the policies that we've written have been huge deals for us as well. Written $300,000 policy or a $400,000 policy, and all of a sudden those start becoming normal. And to us, or to me at least, I believe that is successful. When all of a sudden we've reached this level, now we want to keep reaching this level. So I don't know that success for us has a ceiling. We're going to continue to reset every time we become successful and accomplish goal A. Then goal B is going to be higher than that. Goal C is going to be higher than that. So succession for me is to continue to progress up that mountain and continue to get better and better as people, as our business, as leaders. Obviously I came from a W-2 job and Herb came from still another insurance agency. We need to grow as leaders and for our company as well. So I think that has a lot to do with my success as well. Personal leadership, personal successes have a lot to do with it, not only financially.
Yeah. I think Tim summed that up pretty well. It's like, I don't know, there isn't a number that measures success. I think success is if you're doing something to move the needle forward. And I'd like to say daily, but that's really hard. We talked about it today at lunch, like holding each other accountable. I've had a great sales year. I mean, we're halfway through the year and I'm close to the best sales year I've ever had in a 12-month cycle. And we're halfway through the year. What if I'd have just made 4 more phone calls every week? Would it be 4 times farther ahead? So the question is like, Tim, every Friday, like hold me accountable, because 4 phone calls can make that huge of a difference. And we're not talking writing 100,000 in like millions of dollars in premium in a single year. If I'd have just made 4 more phone calls, could it have been 5 million?
Yeah.
And so I think it's unfair to say, do I move the needle forward every day? I don't know if I'm quite there, but if Friday comes around, Saturday morning, I'm reading some articles and I look back on the weekend and that week moved the needle forward, I think that's a success.
Mm. Yeah. Perfect. Yeah. Moving the needle forward is huge with that. And then last question, what is the best advice you can give new multifamily investors or students?
I think you really got to jump into it. We go to the 3-day and then a lot of us pay a lot of money to join the mentorship program. And I spoke with some people that we had met at our 3-day here in Detroit at peak. So they had been in it for about 6 months. And Zach, they hadn't done a lot. And by they hadn't done a lot, I mean, they hadn't really done anything. So you really need to put the onus on yourself. And again, we talked with Samuel. He said the same thing. So we're going to continue to try to pass it on. It's a great mentorship program. It's awesome to learn. You're getting the basics, but you really have to put in some time. And the path is great, but you need to start getting out of your comfort zone and having calls with, depending on what you want to do in your role, whether it's talking with brokers, whether it's talking with insurance people like us or acquisition people like Zach. You really need to put some time, effort, and go out there and really do it, because no one's going to do it for you. A lot of people think, hey, I put in all this money, this should be easy. It's not easy. It's going to be hard, but it's been a lot of fun. I mean, I've learned more in the past year than I could have imagined. I had, during one of our investor meetings, my dad was actually one of the people that I was presenting to. And truth be told, that was a little more nerve-wracking probably than even presenting to total strangers.
Yep.
But Herb and I did it. It went pretty well. My mom called me after. She goes, how in the hell do you know all that stuff? And it's because we put the time in, we've done it. And I think a lot of people, again, are nervous to go out and start talking to people. But hey, in this 1 year that we've been in this mentorship program, we have learned a crazy amount, and we're able to talk to people about that who don't necessarily have even a basic understanding of it. So you really need to get out of your comfort zone. Some of the people at Peak were super worried about raising capital and starting to talk to people. And I go, talk to people at the grocery store. Who cares? You're probably never going to see them again, but just tell them, hey, I'm a real estate investor, and start talking about it. The more and more conversations you have, the easier it gets. I mean, Herb and I gave probably 20 presentations for this last raise, and the first one was a disaster. The second one got better. The third one got better. The fourth one got better. I mean, by the end, we were pretty darn good at giving these presentations and really being able to anticipate questions and objections that were possibly going to come up to us. We were able to address them before. And I think it really eased a lot of people. And that's what really enabled us to go out and raise the money that we needed to pretty quickly, and gave us the confidence to go out there and do it again. We got done raising this and went, well, crap. Now we got to find another deal, because I want to keep raising money. We got people very excited to get into multifamily investing on the LP side. Now we want to have stuff for them. So a real mind shift change was, hey, we're not begging people for money. We're giving them an opportunity to invest and make money, potentially change their lives as multifamily mindset is going to continue to change Herb and I's.
Yeah, 100%. Yeah, Herb, anything to add to that?
No, it's the same thing. I mean, the process is pretty simple, but doing it every day is hard, right? You have to get up and do it, but we're not. 10 years ago, a guy told me, maybe 15 years ago, a guy told me, he goes, listen, if you want to make big boy money, you got to do a big boy job. So you can't do things halfway. You can't just pay 40 grand or go to a couple mentorship meetings and think that's going to return you $2 million in owning property. That's not how it works. If you want to make $2 million, you have to do $2 million worth of work. You have to go to work, and work it's not the stuff that gets you there. Like, underwriting is part of the process, but you don't get paid to underwrite. You have to underwrite 100 deals to find one deal. You only get paid when you close. So people can, I underwrote 10 deals. I talked to 10 brokers and I looked at 50 OMs. All of that stuff is just part of the process to get you to the finish line. You don't get paid for looking at OMs. It's just part of the process. So it's hard for me when people look at 50 OMs and think that they put what they need to in. No, it's just part of the process. And so the new student, right? It is a lot of work. The payoffs there, and we all know people who own a lot of real estate, and they've done very well at it. And with the right coaches and mentorships, I don't think you end up buying a bad deal. And if you find a few more coaches and mentors, they help walk you through the standing at the ledge being scared, so you will take the leap. But you can't make excuses. There can't be this, I looked at a bunch of stuff and it just isn't working. None of that. That's not how you get paid. You have to go all the way, and you have to put the time in.
Yeah, 100%. It's a lot of work. You got to put the time in, and yeah, I would agree with you. I don't have anything to add there. I 100% agree with you guys on that. It's take action, right? Take massive action, not just little action. Take massive action and do it, and continue to do it. What Dallas says, fall in love with the process, because this is a process. And if you want that success, you closing your deals is take massive action and enjoy underwriting hundreds of deals, looking at hundreds of properties, getting hundreds of no's, right? Fall in love with that. It's going to happen, and it's part of the process to find that the ones that do work, and it makes sense to move you forward in your goals with that. So awesome. You guys provided so much value today, and I'm very appreciative of that. I learned today, and let's go through some recap there. I know I learned about insurance and why now electrical panels are a huge issue, an issue with or on the checklist, right? For dumb reasons, but it is what it is, because one or two people ruined it for the rest of us. But that's the name of the game with it. That's what I learned, partly from that piece. But you guys know your thing with insurance, and building the relationships with the right people can pay off, whether that's today or 10 years down the road. Start building relationships with people and build that rapport. And on top of that, not just building relationships, but connecting people. Be the connector, because that does come back tenfold
Yes.
And I mean, so many more takeaways that I have from today. So listeners, go back and listen to this. I know I'll be listening back because there was a lot that you guys shared, and I appreciate that. With that, listeners, if you guys want to connect with these guys, their information's in the show notes. So connect with them from an insurance standpoint, pick their brains from investor standpoint, right? See how their experience has been in growing their business. They have a wealth of knowledge, and I know that can help you guys as well. So guys, thanks again for your time. I appreciate it. And listeners, we'll see you next time.
Yeah, thanks, Zach.
Thank you, Zach. We appreciate your time. Thank you, Tyler Deveraux and the whole MFM team and all the students. Good luck, everybody.
Multifamily Mindset Podcast.
Think bigger.